Hey folks, Chris Versace here, and welcome back to another episode of the What Does It Mean podcast. I am joined by my gal pal, Lindsey Bell, but we have an extra special episode today. That's right, we are bringing in Arthur Laffer, the president and lead portfolio manager of Laffer Investments. He's also the strategy leader for the dynamic U.S. inflation, fixed income, and global equity portfolios. It's a timely conversation because we get right into the weeds on tariffs, but we also talk a little bit about AI and one or two other topics that I think you're going to find particularly fascinating. So what I would say is sit back and let us share our conversation with Arthur with you. Key points you're going to want to pay attention, though, as you sit back and listen. Tariff impact. What's the impact on inflation? What sectors are potentially in the crosshairs? You don't hear a lot about this next one, but what could go right from tariffs? And finally, an update on what elections in Europe could mean for policy and the macro economy.
Welcome back, everybody. We are so excited to have Arthur Laffer here today of Laffer Tengler, and he's going to talk to us today about tariffs. It's a hot topic that's been on top of everybody's minds. It's just been a flurry of news headlines. It's really kind of hard to keep track of exactly what is happening when it comes to tariffs, what it means for the economy, what it means for businesses, and what it means for the consumer. So, Arthur, I actually thought that we would just start from the very beginning, because there's been a lot of talk about why President Trump, he's, self-described as the tariff man, but why is he so focused on implementing these tariffs? From your vantage point, is the primary goal industry protection? Is it reshoring businesses, maybe onshoring businesses from overseas? Is it tax revenue? We've heard that. Is it a negotiating tactic for immigration policy or other policy? What is his primary focus or goal?
I think really my belief is that it's fairness. There was a quote about Trudeau saying they were having a conversation more recently about dairy tariffs, and it's true. Canada imposes like a 300% tariff on U.S. dairy products. So look at we're the 800-pound gorilla when it comes to global trade, and we give a lot of people deals that they don't give us. Europe, it's cars. Canada, it's dairy. So it's all over the place. I think that really what we're talking about here is overall lowering. He wants to lower tariffs. U.S. companies can be much more competitive globally if these countries stop protecting all their industries. And there's lots of reasons why countries do that, pretty much at the detriment of the consumer and the producers that use those inputs. But I think a lot of times we get the short end of the stick because we're the biggest country.
So, Arthur, are you in favor of these tariffs? I don't want to mince words because I'm just trying to understand. Like, on the one hand, I think everybody would like a fair and level playing field, right? Yeah. No question about that. Best company's position wins, that sort of thing. But at the same time, there's a lot of disruption, a lot of uncertainty that we're only now starting to see in some of the economic data, whether it was S&P's flash February PMI, or some of the University of Michigan, their consumer inflation expectations index that shot up, or as we're taping it today, the Conference Board's latest data that, just totally fell through the floor, and really says that folks are worried. Folks are concerned.
No, I hate tariffs. Tariffs are bad.
Okay.
Unequivocally, tariff is nothing but a tax. So it distorts economic incentives. It distorts economic behavior. It clearly lowers GDP in the macro sense. Now, in the micro sense, some people are going to get I'd say the sharp end of the stick. So if you're in a protected industry, all you do is know U.S. history. We could talk about steel, because you looked at the recent attempted acquisition by Japanese steel at U.S. Steel. But you go back to the whole Lee Iacocca stuff and the Chrysler, auto industry completely protected by basically tariffs that made it almost like Germany, by the way, ironically, that protected U.S. industry, and to their detriment. They didn't reinvest, they didn't innovate. And then when we took the tariffs down, what happened? They got crushed, which was good for the consumer.
Yeah, it is. The auto industry, I think, is a really interesting one, too. I love that example that you give, too, because when you look at the tariffs that, we have to pay on European cars, then they don't have to pay on our car. It's astronomical.
And Europeans pay it because it keeps their prices higher too. So by protecting the industry, it means that the cars in Europe are much higher than they would be. And you wonder why. I think the funniest thing, you go to Europe, what's the one thing Americans don't see in Europe? Pickup trucks, SUVs. Why?
Right.
It's all because of tariffs, regulations, and taxes. And a tariff is just a tax. I mean, that's really, in the truest sense, and it distorts economic activities to the detriment of consumers and producers.
So you're starting to see, like Chris talked through some of the things that we're seeing, especially in sentiment surveys, but you even saw it in some of the regional manufacturing surveys, that people are concerned about the manufacturing business in the future, maybe not the near term. I think they're still optimistic, and then months ahead, but in the little bit of a medium to longer term, they're becoming nervous. Consumers are concerned about what tariffs mean for them. That might simply be because they're in a more precarious position now, as I've talked about it, versus where they were in 2017, 2018, when the first round of tariffs went in, as you said, in anticipation of absorbing some of those higher prices. So I guess the question really is, how does this impact inflation and pricing power and things like that?
I mean, it definitely biases inflation to the upside, for sure. I mean, unequivocally, it makes industries not respond well. It increases prices at both the producer level. You saw PPI. It wasn't just CPI that shot up this last month. It was PPI too. So every one of these things gets actually put into place. Either people are trying to front end, try to increase their warehouse full of steel and aluminum, and anything's going to get taxed. I read an article recently about how countries that are going to be hit with the tariffs, increased tariffs, are trying to find ways to shift their inventories to countries that aren't going to get hit with the tariffs, i.e. try to avoid it, like Russia's been doing with oil, and so that India, to avoid the tariffs and all the restrictions on trade. So there's lots of ways, and depending on how traded, this is more macro term, how traded the good or services that we're talking about, and whether they can onshore it in the U.S., which obviously Trump would love. Anybody loves that because that means U.S. jobs, right? And in fact, look at the number of car manufacturers that are in the U.S. I mean, there's a huge Mercedes plant down in Alabama, right near University of Alabama. Tennessee, I'm in Nashville, Tennessee. We have tons of car manufacturing now in the South in general. But yeah, I mean, it causes all these dislocations. The short-term effects are going to be inflationary if the tariffs actually go through, and depending on how long they actually stay in place.
So Art, do you think that means, like, when we saw that February flash PPI or PMI report, from S&P Global, I was surprised to see the upturn in manufacturing, right? Services contracted. Do you think perhaps the manufacturing data benefited from some pull forward in activity because of what you're talking about? And should we expect some of that as we get more February data? So the economy might look better than it really is.
Yeah, it's amazing. As we've gotten more advanced digitally, you see that when you have changes in, say, any kind of macro policy, the questions you want to ask yourself is, what does it do to the timing, location, composition of production? And so if a tax increase is coming next month, what do? You try to accelerate activity now. You try to accelerate economic activity now at the lower tax rate, whether it's a regulatory tax or straight up, income tax, whatever it is. We see consumers and businesses timing these things with more and more accuracy and faster speed as time's gone on. I mean, you can see people defer income into next year. They think the tax cuts are coming, or accelerating depreciation in a higher tax year, and businesses do it too. So absolutely.
Yeah, I just remember from my early days when I was working at Salomon Brothers and then DLJ in the machinery capital goods industry, like whenever we saw regulatory mandates come in for like braking technology or something like that for, those big Class 8 heavy duty trucks, you would see orders just like pile up. And then all of a sudden, as soon as the mandate date would pass, they would fall just disappear, fall apart.
Yeah, it's all timing. And, remember, most of these numbers are either quarterly or monthly, but quarterly is typical macro numbers. So yeah, you see people front end it, or they'll defer it the opposite. So if you're a consumer and you think Trump's going to actually get a tax cut through, hopefully before the end of the year, if you can shift income from December 31st to January 1st, you do it. So you start cutting deals to get people to delay, to defer your income, increase expenses into 25 and shove your income. If you can do it one day, and then after tax rate of return is huge.
So I hesitate to pull out the crystal ball, but if that's the case, and we're seeing some pull forward on the manufacturing side, and the timing for these Canadian and Mexican tariffs, March 4th, we'll see if it happens or not. I'm starting to get a little worried about the second quarter GDP number.
Yeah, you should.
You're seeing, I was just going to say, you're seeing the economic surprises, the city economic surprise index. It's at the lowest level since September. So the beats from an economic perspective are getting narrower and narrower. We had a good earnings season, and we heard some of the domestic companies, like most recently Walmart and Home Depot, they talk about the significant amount of goods that they get that are local here in the U.S. And I know there's been a lot of, the Trump 1.0 administration caused a lot of these companies to move around where they, like you just talked about, Arthur, move around where they're sourcing goods from, or even reshore it. So that's certainly having an impact. But I think what's interesting is the rise in prices that we're already seeing ahead of the tariffs too. Like you said, on the PPI side, I know commodities more recently have risen. But also inflation is starting to rise too. And I know there's specific components within that. Like, are we set for inflation, like CPI over 3%? Like, is that reality? Like,
sure. I mean,
I know it's a near-term thing. Like you said, tariffs are like a one-time thing. It's once you cycle it, you're good.
Yeah, but so the hardest part is there's a lot of hard parts here, but from a macro standpoint, the first question you have to ask yourself is, okay, so if these prices start moving around because of the tariffs or it doesn't really matter, any reason. So the first thing you have to do is, all right, what are the substitution effects? So if let's say we do steel, we do petroleum, and let's say we do chips, so we're talking about everything that's in a car, right? Or aluminum, aluminum, steel, chips, and petroleum. We did that. That basically is 100% of what's in a car. Price goes up. Okay, the consumer has a choice. They have to make choices as to, do they buy a cheaper car? Do they buy a more expensive car? What can they afford? So you start seeing all these substitution effects. Do they start buying bicycles? I mean, motorcycle sales go up and car sales come down. So the first thing you have to do is, okay, so what are these substitution effects based upon the changes in price? Because that's going to occur. And how elastic or inelastic are the supply chains? You looked at when we had that oil at $200 a barrel, right? And you looked at all these cities and stuff that would go out and buy natural gas buses, right? Oil collapses in price. You on the bus. So the inelasticity of the demand side versus supply side is really something you have to watch as well. So yeah, I think you get short-term inflationary pops. I think you're already starting to see it as producers go, oh boy, I better grab as much cheap steel as I can. It runs up steel prices in advance of what they think is going to happen.
So
now,
if we follow that logic, Art, let me just ask you from a investor perspective, not to name names, specific companies or anything, but generally speaking, if we're seeing these inflation expectations rise, and they could go even further, right? Once these other rounds of tariffs go into effect, maybe there's reciprocal tariffs, what have you. Do you see more like the warehouse clubs, your Costco's, your BJ's benefiting, or your discount retailers, your TJX, your Ross stores? Do you see them positioned better than, say, Macy's, Nordstrom's, those types of, full price retailers?
Sure, absolutely. I think you're already seeing. Look at Walmart. Nancy, my partner, Nancy Tengler, was just on we did a live cast yesterday. We talked about Walmart, how January is always a struggle for them earnings wise and sales wise, but it's every year. But yes, they should dominate. If you have better pricing power, the consumer is going to move towards you as prices go up. Sure, every day, all the time.
I also think they're benefiting from the fact that, I guess some people know this, not everybody knows this. They are the largest grocer in the U.S.
Yeah. Not surprising.
Well, I think they're benefiting from a trade down of the higher end consumers going to the Walmart. So my question is, Arthur, and not that I'm asking you again to predict the future, but we're in this environment, inflation is going up. The consumer is becoming much more price sensitive than they were even 4 or 5 years ago, right? And you got interest rates that are likely to remain higher for longer because of the inflation situation. The jobs environment has been pretty decent. Could tariffs be the tipping point from an economic growth perspective? Like we're talking about, we're starting to see a little bit of a slowdown because people are concerned. There's caution among businesses and individuals. Can we make it through this, or is this kind of
I guess
a bigger risk than it was in Trump 1.0 ago?
I guess here's my belief, and I'll tell you why my belief is the way it is. It's a couple reasons. Back in Trump 1.0, there was a discussion with Trudeau, who's thankfully on his way out. I think been a former prime minister in Canada, suffered because of it. But there was a discussion, I think, between Trump and Trudeau about tariffs. There was some issues with that. And the conversation went something along the lines of, well, we're going to do the reciprocal on Trump. And Trudeau said something like, well, we can negotiate this. We'll impose that. And Trump, he said, but we really don't like tariffs, is what Trudeau kind of indicated. And Trump said, great, let's get rid of all tariffs between the two countries. Let's just hash it out. And Trudeau's like, whoa. That's that's not the crazy talk. And it's really, I think, the driving force would, in my opinion, that Trump really doesn't want tariffs, or if he does, he wants them very low. Mm-hmm. And if you look at global trade, I mean, we are being taken advantage of. We've done, I think, deals that were not in the best interest of U.S. manufacturing or consumers, by the way. We've talked about a couple. And trade, when you get into the weeds on tariffs and how crazy specific they are, it's like the UK and I think in the EU had this whole issue on tariff on chocolate of high milk content. That UK couldn't call chocolate. They had to call it chocolate of high milk content because of European producers in Brussels. They used less milk. I mean, it's crazy how, if anybody looks into how specific some of these tariffs get with regard to product composition, I mean, it's insane.
That's ridiculous.
It is.
Doesn't
want tariffs. I think he actually is trying to negotiate tariffs down so that U.S. producers and consumers, but more like manufacturing, has a much fair playing field with regard to European cars or Canadian dairy, to name a few.
Yeah, I think ultimately his goal is to, maybe it is fair trade, but I think from a selfish perspective, he wants to say that he is responsible for a strong economy, a roaring stock market, and these other things. And I have to just always question this, the bluster, right? The art of the deal, so to speak. Keep your enemies off balance, all these things that he's, touted in the past, that we're doing them here. And I always kind of, if you're running a private company, fine, do whatever you want to do to your company. It's just a little different to drag the country, right, kind of all the way through this, even though you might have some, in your mind, higher purpose for doing it.
Yeah. And I think that there's a lot of issues. I think we kind of said that. But the great news is that you look at the new the new chancellor of Germany is going to be Merz of the CDU, the Christian Democrats, and he got a little verbal spat with Trump yesterday, and was talking about they're not going to be bullied, they're not going to let America have interference in their elections because of the whole Musk thing with the AfD. But realistically, he started talking about trade. Now, Trump has a huge advantage over Europe on trade. One, he's a single guy, and they're a big bureaucracy. So Merz doesn't have the final say on trade as it regard to the EU. They have to get all of these cats in a room. Cats literally, not like, I'm groovy. These guys have to get together, and they all have very competing interests. So to get them to agree on reciprocal tariffs and stuff like that, it is literally like herding cats. You got one guy that can beat them up and pick them off individually. They can't do that to him. Plus, they sell much more to us than we do to them. So he has a huge advantage over Europe and negotiating reducing tariffs than they do with us. Same thing goes with Canada and Mexico. They sell a lot more to us than we do to them. It's much more dangerous for them to play this game with us and try to do reciprocal tariffs than it is for us to do it. So I think his goal really is to lower overall tariffs, which, by the way, would be a tax reduction and which would actually increase U.S. GDP. Yeah. So I don't believe he really wants a trade war. I don't really believe he wants higher tariffs in the U.S. or anywhere. I think he's trying to get global tariffs down, especially with regard to U.S. producers and manufacturing, because it's in the U.S. best interest. And I think it'll actually raise GDP. Unfortunately, going to the battle is going to be ugly.
Well, I was just going to say, I see where you're taking us, and I hope you're right. It's just that, when we reflect on some of the data that we talked about a few minutes ago, we know what's coming ahead of us with more February data, potentially March data. It's going to be a slog to get there.
Yeah, it'll take. Yeah. If we can get it done sooner, sorry, Lindsay, it'll just get the pain over and the volatility over in GDP as it shows in the numbers. But if he's right, and if I'm right, and I hope I am, then what'll happen is you'll have the trend for GDP go up later in the year.
Yeah, I think you took the words right out of my mouth. I was just going to say, it just means volatility is going to be a mainstay of the market, at least in the near term, until we get through this tariff spat. And I guess, too, if you think about even the way things have gone with Canada and Mexico and the pause and things like that, it does seem like potentially Trump is trying to make a decent deal. And, we sit here, when we think about the markets, it's always like looking around the corners. What's like the worst thing that's going to happen? What's the shoe that's going to drop? It's why I asked you the question, is the tariff thing that's the thing that's going to finally bring that recession we've been waiting 2 years for? Is that what's going to bring it about? But the reality is we don't spend enough time to either talking about what could go right. What if tariffs are reduced significantly? What if GDP is pushed up? And then never forget, it's like over the last several weeks, I think I saw a headline today that the Mag 7 is entering into correction territory. So people aren't even talking about that, the AI revolution and the trade and the potential benefits from a productivity perspective, which we've seen kind of filter through. And I know, Arthur, that's you and Nancy have been focused on productivity too. So I don't know what else could go right. It stands the tariff situation. What are you optimistic about?
Tax cuts. I mean, like normal tax cuts. You've got the bill 1.0, or I don't know. He said he'd take it 2 bills. He'll take tax cuts any way he can. So making the first Trump tax cuts permanent, right? But also bringing down the corporate rate, the personal income tax rate, flattening the slope of the progressivity of personal income taxes in the U.S. Making depreciation 100% the first year. I mean, these are really good things for stocks in the economy, and you can get them pushed through.
Yeah, I think so. What about from a spending perspective? You more tax cuts. Like, how do we offset that Doge? What's Doge? Is that going to make it fly higher?
Well, Lindsay, I'm waiting for my $5,000 Doge check. What about you?
Dividend checks.
Well, I mean, look, I'll hijack the conversation just for a second and say, Art or Lindsay, to the extent you can explain to me how I get a check from savings, I'd love to know it. Because every time I go to Harris Teeter, they always say, "Oh, congratulations, you saved X." And I said, "No, I didn't. I didn't spend X."
That's right.
It's all mindset, Chris.
Yeah.
It's like when gasoline prices go down, you have more money in your wallet. Okay. Same thing.
Which honestly, if there's something I'm really bullish about from a tax spending perspective, it's energy. U.S. energy. We should dominate U.S. energy. I mean, across the board. And I'm hoping that this whole AI explosion across globally, but more as it starts to permeate more of the economy, that what we do is we start seeing utilities becoming a growth area. I think everybody knows that infrastructure and energy infrastructure stinks in this everywhere, not just here.
I mean, look, you just had, who was it? Dominion Power, Duke Energy just upsized their 5-year capital spending programs. Yeah. You're seeing Texas open its arm to nuclear power. There's a lot of stuff that's happening. And I think, you're right that we could very well see, let's just call it energy, and particularly utilities, be a growth area. And that would blow so many minds. I mean, it would be funny.
And think about when AI starts permeating like actual robotics, where you actually get robotics, something other than vacuuming your floor. You get actual real utility and efficiency out of the robotics sector. I mean, all you have to do is look at Japan. It was a funny story. A friend of mine went to Japan, and we're talking about, immigration and aging workforce. And he went to the All Nippon Airways hotel, and he said, usually in the U.S. you'd see a certain groups of people that are in that service side of the industry in hotels and accommodations. And he said he walked into a hotel room and it was like an 85-year-old Japanese woman cleaning his room. And he's just like, oh my gosh, like that's who's cleaning rooms in Japan. But you start looking at robotics and taking care of people, like that stuff actually could be done very easily. As AI permeates, it'll get better and better and better.
Well, think of that and fast food restaurants, right? I read a story that there's one in, or maybe more than one by now, in Japan, where there's one person working in the entire quote restaurant, and it's an IT guy, right? You go in and you order your food on the tablet. It rolls off a conveyor belt, all prepackaged, no people.
And he's an engineer.
Yeah. I mean, it's crazy. But on the other hand, you sit back and you see, at least in this country, where some wages are going. You look to California, and the need to push productivity. I could see us, maybe not getting there 100%, but seeing a lot more robotics and smart technology coming into the fast food restaurant industry here.
And AI is going to get a lot cheaper as it starts to move down.
So where do you think we are in the AI adoption curve? And I ask this because, like I collect a lot of, data points, right? And you're seeing like Chipotle is using their avocado AI to help, it's a silly name, to help hire people, right? We're seeing Amazon, Walmart, McDonald's is talking about it, Carvana, Booking.com. And, on the one hand, other surveys from CIOs are like, oh, we're increasing our spending on AI, driving productivity. And I have to just sit back and be like, okay, everybody's saying it. Are they just saying it? And we're kind of, still in the early stages. Or are we starting to move to like, the third inning, maybe the cusp of the fourth inning? What do you think?
AI, I think we're in the first inning.
Yeah. Still early days. Okay.
I mean, I think now it's these are large language models, and this is not my area of expertise, but I love tech. I've been obviously my whole life, but from an efficiency standpoint, it's great. It'll increase output, which is kind of what Doge is doing, by the way. Elon Musk, federal government. I mean, you hear these crazy stories about retiring Social Security benefits and taking paper files and printing them out and taking them into like abandoned mines through an elevator shaft. I mean, you're just like, who's doing? What are they doing? It takes 6 months, or what? You, from a private sector perspective, you're like, they're using floppy disks somewhere. Like they still make floppy disks. That was the first question I'm like, and it's not a museum. Someone's actually manufacturing floppy disks for a government agency. Are you joking? My phone's more powerful than whatever computer uses a floppy disk. So yeah, I mean, I think we're in the early stages, and it's going to start, you're going to see chip costs collapse as they start to move it from these huge data centers into robots. You don't need a full like semi-autonomous AI to vacuum your floor or clean a hotel room. You don't, or flip burgers.
Well, my long-term prediction on AI is a lot like the internet. And what I mean by that is I remember sitting there when Netscape was first available, right? And you would go, for example, to like gap.com, right? Because at that time, everybody had khakis. And you would go to that website and it was a picture. Could you do anything? No. Could you order anything? Absolutely not. All these other things, that we take for granted today. So I think that if we, use that as a comparison, and the time frame might be faster, much faster.
Yeah.
The things that we'll wind up doing with AI will really surprise us. Just like today, we can stream, mobile payments and all the things that we do on, this thing.
What's totally true, you see it in productivity. Maybe I'll just make this the final point too, because this has been such a robust conversation, is that, in the, 1990 to 2000 decade, productivity was 2.2% on average annualized. In the second half of that decade, 95 to 2000, it was 2.7%. So as the internet, PCs, all that started to take off. But it was really in the 2000 to 2010s decade, the productivity was 2.7%. That was like where things like once we got through the kinks of the beginning of things started to take off, and then it
You
actually slowed down in the 2010s.
you may not remember this, Lindsay, but I bet Art does when I say that when I was at Solomon Brothers or DLJ, you had to go request documents from the library that they would have to print and send to you. If you needed to get something signed, you used a bike messenger to send it. Okay. None of this PDF email stuff.
No, I did experience some of that, believe it or not.
Well, I'm just giving you the benefit of the doubt, Lindsay.
All right, Arthur, what else is on your mind? Anything else we didn't cover that you want to get off your chest before we close down this session? It's been a really great, robust conversation, like I said, but if you have the final word.
I guess the only thing I'm watching is I watch a lot of elections. I'm macro top down. So my view of the world, unlike my partner Nancy, she understands stocks and I can mouth off about some things, but that's about all it is mouthing off. I'm not a fundamental guy by any stretch of imagination, but I watch a lot of political economics because the joke I do sometimes is if you ever meet a macro person and they tell you they're apolitical, they're actually one of two things. They're a liar or they're stupid. Because macro is nothing but political. And it's not political in the sense of parties per se. It's, politics is how policy gets enacted, changed. So if you're not focused on the politics, you have a hard time reading what the policy mix is going to look like coming, and then that's all macro. Everything's capital letters, right? So I'm watching these elections, and particularly in Europe, as it pertains to kind of the US and where the trends are going. We had elections over the weekend in Germany, where the AfD is now the second largest party. They're going to rebalance out. They'll probably have about 24% of the Bundestag, and they're going to get cut out of government. So you're going to basically disenfranchise. In Germany, I'm excuse them, 1 in 5 Germans voted for the AfD. And they're not going to have a voice in government the way it looks like. And, when you have these coalitions try to put together a majority, it's always lowest common denominator because you're having to negotiate with minority parties to get a consensus going, right? Look at France. Le Pen's party, she should be the majority. They totally pushed her out. It's the same thing in Portugal, Spain. I mean, it's everywhere. You look at Nigel Farage's, Reform Party. It used to be the UKIP. The numbers are looking huge. Keir Starmer, that guy should be building a bomb shelter. He's going to get taken out completely. And so are the Tories too. So you look at the electorate globally, it looks pretty upset and it's moving to the right everywhere. What's interesting is it's not necessarily these aren't Reagan Republicans, or as, I grew up as I call him the real president, although I tend to like a lot of Trump's policies on the economic side. But these are anti-immigration. They're trying to get their countries protected. They're struggling with a lot of the same issues that we are. But it's interesting as I look across the globe, I see this everywhere. And you see the old order trying to disenfranchise and keep these right-wing parties out by either vilifying them, calling them outright Nazis in Germany. Same thing with Le Pen in France. You got Hungary, Orban. I'm not saying these are all great people and they have all great policies, but you can see the electorate pushing that direction, and it's global.
Yeah, and it's forcing that. I think it also is a reflection too of the changing times from a technology perspective, but also from a consumer perspective across the globe too. What we've seen over the last several years from a wage and job and worker shortage perspective. I think it all probably plays a part across many parts of the globe, not the whole world, but
what does it mean for policies? Right. Because policies are probably going to be changing quite a bit. So that's why I really care about this stuff. It's what does it mean for a policy mix? Because these people have very different platforms than the governments that have been in place for a long time.
Right.
Watch that.
Well, we're going to have you come back on to give us the nitty gritty of it as different elections occur.
They're coming.
Well, thank you so much for your time, Arthur. This was such a great conversation. We really enjoyed our time with you.
Absolutely awesome. Thank you. Thank you. Great conversation with Art Laffer. Now, I have to say, I've never met him, never spoken with him. I will certainly do so in the future, but I believe you know him a little bit. Didn't he even interview you at some point?
Yes, he and his partner, Nancy Tangler, they do little spaces on Twitter and LinkedIn every week. And so I was a guest on there. So that's how I got to meet Arthur Laffer, but I'm friendly with Nancy. And so she's always spoke so highly of him. She calls him the more outgoing one out of the two of them. And she's pretty outgoing, if you ask me. But you could tell through our conversation, he's got a good personality. So it was good to have him on our show and be able to ask him the questions,
No,
right?
and to be fair to him, he's a handsome man. I'm comfortable enough to say that, and I just say that because you said he's got a good personality, right?
Yeah, well,
So,
and you know what? He looks good in that blazer. Maybe you should wear a blazer.
you are 100% correct. Now that we're flirting with video, I might have to get spiffed up, Lindsay. We'll see. But what just reflecting back on our conversation with Art, what was the one kind of takeaway that really jumped out at you?
You know, what caught me is because something that we don't ever really talk about is that what could go right from tariff,
Oh,
right?
Lindsay, why did you have to say that? You are stealing my thunder.
Well, it just stood out, right? We're worried about what's the worst possible outcome, what's going to take us into the recession, what's going to be the tipping point. Obviously, we talked about all that. And he was like, "Well, what if Trump actually can reduce tariffs? That boosts GDP." I mean, that was like mind blown, right?
Yeah, yeah. No, I agree with you. And I think that in the news cycle that we're seeing about, tariffs, responses, or, what's going on in terms of cost reduction efforts in Washington and the federal government, people being laid off or what have you, that, we kind of get caught up in, oh boy, this is not good for the economy. But, perhaps we need to step back and ask that question, right? What if things go right and Trump is able to negotiate lower overall tariffs, that he's able to deliver on tax cuts? Boy, what could that mean? And it's an easy trap to fall into, the negative Nancy, Debbie Downer, whatever you want to call it. But I think you're right. A healthy dose of optimism, maybe that should be part of our thought process.
Yeah, are we just too pessimistic on this show? Do we need to bring the sunshine?
I try, generally speaking, to be half glass full, right? Because I got to be honest with you. I've spoken with more than a few half glass empty folks. They are no fun. So let's try to be fun. What do you say?
I agree. I think we're both glass half full, but we got to, we're paid to worry, right?
So true. So
But,
true.
but truthfully, we're stock people, we're equity people, and that equity people are optimists. Fixed income people are the Debbie Downer.
Yeah, no, you're right. You're right. Because, when you're doing your homework and you're trying to figure out where a stock could go, you got to be mindful of the risk, but you got to, capitalize on the opportunity. So I agree with you, Lindsey Bell. I somehow knew this was going to happen, but we need to your point earlier when we were talking off camera, Lindsey, we need to argue more. We need to spice it up a little. So let's try and figure out some way to do that. Maybe I'll just start disagreeing with you just for the heck of it. We'll see.
Okay.
Anyway, that's our episode for this week, folks. Thanks for listening. Again, if you need anything from me between now and the next episode, march on over to the Street Pro portfolio. And Lindsay, remind folks, you've got a new location, a new gig. Where can they find your stuff?
Yeah, check me out at clearnomics.com, or, as usual, I'm on LinkedIn, putting some of my market thoughts out there on a real-time basis.
All right, that's today's episode, folks. Thanks for listening. We'll be back soon.